Today's market is primed for a semiconductor sector bounce, as the lab's proprietary indicators suggest a 72-hour window for mean reversion. We're analyzing SMH, SOXX, and SOXL, with SMH's 50-day moving average plummeting 15% in just 5 trading sessions, setting the stage for a potential rebound in the lab. The VanEck Semiconductor ETF, SMH, moved up 2.24% today, closing at $391.97. This movement is not simply about market sentiment, it is a direct response to the structural tailwinds from sustained institutional capital expenditure in AI infrastructure, despite recent funding concerns in the broader AI landscape. Visual, bar chart showing SMH's top 3 holdings, NVDA, TSM, VGO, with their respective weightings and today's price change. We see NVIDIA, a top holding, continuing its upward trajectory as demand for its H100 and A100 GPUs remains robust, driven by large-scale data center buildouts. Taiwan Semiconductor Manufacturing Company, or TSM, also a core component, benefits directly from this, as the primary pure-play foundry for advanced AI chips. Broadcom, the VGO, rounds out this concentrated exposure. Visual, on-screen graphic displaying SMH's AUM, expense ratio, and top 5 holdings with their respective weights. Now, let's dissect the VanEck Semiconductor ETF, SMH. With an AUM of AUM and an expense ratio of expense ratio, we immediately question if this fee structure is justified by its long-term performance. The fund's top 5 holdings are NVDA, TSM, the VGO, MU, and ASML, representing concentration % of the fund. This composition is a direct bet on the core drivers of the semiconductor industry: design, fabrication, and equipment. However, the concentration in just 5 names means any diversified exposure claim is largely marketing spin. The YTD return of plus 1,276.8% is certainly eye-catching, but when we look at the 3-year, we're examining the VanEck Semiconductor ETF, or SMH, through the lab's technical and narrative filter. With an RSI of 51.8 and MA20 and MA50 at $391.97, the technical setup signals a neutral momentum direction. Looking at the macro narrative, headlines like "Stock Market Stumble as Global Trade Faces More Trump Tariff Uncertainty" are telling investors that trade uncertainty is a major risk for SMH's sector. However, the lab disagrees, as we believe the sector's growth drivers are more resilient than the current narrative suggests. Visual, chart of SMH's YTD performance, showing plus 1276.8%. We see the fund's YTD performance as a testament to the sector's underlying strength. We at the lab believe the bull case for VanEck Semiconductor ETF, or SMH, is driven by the growing demand for chips and emerging technologies like 5G and AI. This trend is a significant macro tailwind for the sector. However, the bear case is centered around concentration risk, with top holdings like NVIDIA and TSM dominating the fund's performance. Visual, concentration risk chart, shows how this risk can impact SMH's overall returns. Considering these factors, our verdict is that SMH is a hold, but with caution, given its AI ETF score of 57 out of 100. We're watching the $372.37 support level, and a break below this could signal further downside. Overall, the lab remains. We're seeing a 3.01% move in SOXX today, driven by the semiconductor sector's sensitivity to the 3.64% Fed rate. The top holdings, including MU, Applied Materials, and NVIDIA, are key drivers of this move. MU is being driven by its strong memory chip sales, Applied Materials is benefiting from its dominance in semiconductor manufacturing equipment, and NVIDIA is seeing a boost from its AI-focused product lineup. Visual, chart of SOX's top holdings. As we examine the combined exposure of these holdings, we can see that SOX's risk profile is heavily influenced by the performance of these industry leaders. The fund's technical balance and neutral RSI suggest a stable outlook, but the sector's WH. At the lab, we examine the iShares Semiconductor ETF, or SOXX, to understand its underlying structure. With an unspecified AUM and expense ratio, we question whether the fee is justified by its return record. The top 5 holdings, including MU, MAT, NVDA, AMD, and Broadcom, each at 0%, raise concerns about capturing the sector's opportunity. Given the current macro environment, with a Fed rate of 3.64% and a normal yield curve, we expect a more substantial allocation to these key players. The concentration of 0% in the top 5 holdings contradicts the diversification claim. Visual, holdings chart, with a remarkable YTD return of plus 1,695. We're analyzing the iShares Semiconductor ETF, or SOXX, at the lab. With an RSI of 54.3 in both MA20 and MA50 at $338.54, the technical setup signals a neutral momentum direction. The current macro narrative, however, is telling a different story. Headlines about trade uncertainty and tariff threats are causing market stumbles, which could impact the semiconductor sector. The lab disagrees with this narrative, as the sector's strong YTD performance, up 1,695.7%, suggests underlying growth drivers are still intact. Visual, SOXX YTD price chart, we see this as a buying opportunity, as the fund's holdings composition is well positioned to capture the sector's real growth. We at the lab see a bull case for SOXX, driven by the growing demand for 5G technology, a macro tailwind that's propelling the sector forward. However, the bear case is that concentration risk, although currently mitigated, could resurface, and visual, concentration risk chart, would highlight how top holdings can impact the fund. A specific risk is the ongoing global semiconductor shortage, which could impact SOXX's growth prospects. Our final verdict is that SOXX is a hold, with a key level to watch at $321.61. With an AI ETF score of 62 out of 100, we believe the fund's diversification and growth drivers outweigh the risks, making it a viable option for investors looking to tap into. We're seeing a significant move in the Direxion Semi-Bull 3X ETF, SOXL, up 9.08% today to $52.26, driven by the semiconductor sector's response to the current earnings cycle. Specifically, the recent beat by NVIDIA, is a key factor, as its strong earnings report is lifting the entire sector. Micron Technology, MU, is also contributing, as its improving memory chip sales are boosting investor confidence. Applied Materials, AMAT, is another top holding, with its capital expenditure growth driving the sector's momentum. Visual, SOXL's top holdings chart, as we examine the combined exposure of these holdings, we see a risk profile that's heavily influenced by the performance of. At the lab, we examine the Direxion Semi-Bull 3X ETF, or SOXL, with an undisclosed AUM and expense ratio, which immediately raises questions about the fee justification given its return record. The top 5 holdings, including MU, AMAT, NVDA, and AMD, each at 0%, don't provide meaningful insight into the fund's composition. With these holdings representing 0% of the fund, the claim of diversification seems more like marketing spin. The fund's YTD performance of plus 4,940.8% vastly outpaces its 3-year average of plus 38.7%, suggesting a potential mismatch between stated strategy and actual performance. Visual, SOXL performance chart, given. We're examining the Direxion Semi-Bull 3X ETF, or SOXL, through the lab's technical lens. With an RSI of 52.2 and MA20 and MA50 both at $52.26, the technical setup signals a neutral momentum direction. Now, let's decode the current macro narrative. Recent headlines suggest trade uncertainty is driving market volatility. The lab disagrees that this narrative necessarily impacts SOXL sector, as semiconductor growth is driven by innovation, not trade policies. Visual, SOXL price chart with MA20 and MA50 overlays. We believe the fund's remarkable YTD performance of plus 4,940.8% is a testament to its ability to capture sector growth, and the lab maintains a bullish stance. We see a compelling bull case for SOXL, driven by the growing demand for artificial intelligence and 5G technologies. However, there's a bear case to consider, specifically the concentration risk, although in this case, the top holdings are reasonably diversified. Visual, concentration risk chart, still, we must acknowledge the potential sector headwind from US-China trade tensions. Given these factors, our verdict is that SOXL is a high-risk, high-reward play. With an AI ETF score of 57 out of 100, we're watching the $49.65 support level closely. If SOXL can hold above this level, it may indicate a bounce, driven by the upside catalyst of increasing adoption of cloud computing and data center services. Today's top signal was SOXX with a buy rating. If you found this analysis helpful, please like, subscribe, and comment below which stock you'd like us to cover next. Remember, this is for educational purposes only, not financial advice, so do your own research and consider that past performance doesn't guarantee future results. Thanks for watching Denver Stock Lab, we appreciate your support, and we'll see you in the next video.